SEC closes in on rules that could reshape how the stock market operates. Now, this is pretty substantial because it's the plumbing of the stock market. It's essentially when you take your phone and go place an order and submit your order and you essentially get filled, right? It's that whole process. And that's what really hurt the meme stocks, air quotes there, the last time around when they were really starting to rally, and why essentially the buy button got disabled was because this plumbing was so inefficient. It put a lot of potential baggage or a lot of the loss if hedge funds were to default on the brokerage firms, and I think this could be a big step in the right direction to changing a lot of that. So that's what we're going to get into here in this video. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the pinned comment, as well as that if you guys want to get your free stocks with Webull, Moomoo, and Public down below in the description of this video. That is also free 99. So jumping straight into this article, it says the Securities and Exchange Commission is preparing to propose major changes to the stock market's plumbing as soon as this fall. Chairman Gary Gensler directed SEC staff last year to explore ways to make the stock market more efficient for small investors and public companies. While aspects of the effort are in varying stages of development, one idea that has gained traction is to require brokerages to send most individual investors' orders to be routed into auctions where trading firms compete to execute them, people familiar with the matter said. SEC staffers began floating plans with market participants in recent weeks, and Mr. Gensler is planning to detail some of those potential changes in a speech Wednesday, these people added. The most consequential change being discussed would affect the way trades are handled after an investor places a so-called market order with a broker to buy or sell a stock. Market orders, which account for the majority of individual investors' trades, don't specify a minimum or maximum price the investor is willing to pay. Mr. Gensler has said he wants to ensure that brokers execute orders at the best possible price for investors, the highest price for when an investor is selling, or the lowest price if they are buying. Current rules require brokers to perform reasonable diligence to determine the likely best market for executing a trade. Many brokers route orders to big electronic trading firms called wholesalers, including Citadel Securities or Virtue Financials, rather than exchanges such as the Nasdaq stock market, arguing that wholesalers provide the best prices. Some brokers, including Charles Schwab and Robinhood, accept compensation from wholesalers for routing trades to their venues. Mr. Gensler has said this practice, known as payment for order flow, creates a conflict of interest and limits competition for individual orders. Under the auctions being considered by the SEC, different firms would compete with each other to fill an individual investor's trade, according to people familiar with the agency's plans. Such a mechanism would fundamentally alter the business model for wholesalers, which can make more money by trading against smaller investors than they do on public exchanges, where they might find themselves trading with other sophisticated trading firms or institutional investors. An SEC spokesman declined to comment. So hopefully we can all see how big of a deal this could potentially be when we do go into the next MOASS-like event. Potentially there won't be that need to disable something like the buy button. Now, this article continues to go on to say a number of Wall Street firms pushed back forcefully last year when it became apparent that Mr. Gensler was targeting their business models. Wholesalers and brokers ramped up their lobbying and campaigning spending in Washington and pushed their own plans for improving the stock market. Virtue and Citadel Securities in particular have argued against the sort of changes the SEC is considering. They say the current system, including payment for order flow, has underpinned a broad reduction to trading costs that has made the stock market more accessible. Douglas Shifu, chief executive of Virtue, said the order-by-order competition sought by Mr. Gensler could allow trading firms more discretion in choosing which trades they fill. This could end up being more profitable in the short term for wholesalers, he said, but wouldn't necessarily help investors. The SEC should engage all market participants before proposing significant untested changes that would harm retail investors, execution quality, and reduce retail investors' access to our capital markets, Mr. Shifu said. A spokesperson for Citadel Securities said the firm looks forward to reviewing the SEC's proposals and working with the agency. Quote, it is important to recognize that the current market structure has resulted in tighter spreads, greater transparency, and meaningfully reduced costs for retail investors, the spokesman added. The SEC commenced its review of stock market structure after the frenzied trading in GameStop Corp and other meme stocks in early 2021 brought fresh scrutiny to the handling of individual investors' trades. After a year of internal deliberations, the agency has honed in on a narrowing set of proposals. If the SEC votes to release them for public comment later this year, they would have a path to implementation, as Democrats hold a majority of seats on the commission. The agency is also considering creating more stringent versions of the so-called best execution rule that direct brokers find the most favorable terms for their customers. Two of the people said the rule that brokers currently follow was written by the financial industry regulatory authority and industry body overseen by the SEC. The SEC is also weighing a proposal to allow stock exchanges to quote shares in increments of less than 1 cent. This could enable venues such as NASDAQ or the New York Stock Exchange to better compete with wholesalers, which can beat the prices publicly displayed on exchanges by adding or subtracting hundredths of a penny to the price of a stock. Two people familiar with the matter said the agency is also considering an idea to harmonize the price increments known as tick sizes that are available on exchanges versus other venues. In addition, SEC officials are aiming to reduce the maximum fee that exchanges can charge brokers to access their quotes, two of the people said. Like some of the other changes under consideration, such a move could encourage more orders to be sent to exchanges rather than other venues. So I think there was a lot here in this article. I will go ahead and link this down below in the description of this video as well, because there's multiple different things that could be very, very bullish for AMC stock. Just to point out the one there, obviously, which essentially would get rid of payment for order flow and do that likely for good this time around, or the other one, which would make the quotes cheaper for the lit exchanges, so hopefully drive a lot more orders to those actual lit exchanges, because we know how much manipulation actually goes on in those private trading programs. Virtue, Citadel, obviously it's a big problem, and that's partly I think why Citadel has such great returns so far for 2022. Overall, I just personally think this would change the game for AMC stock. Really, you know, they're talking about the fall for these changes to possibly get implemented, even if it's a little bit after that and we have not for whatever reason seen the MOASS by then. I think it could be an overall substantially big deal, right? We have market conditions that are very primed for seeing margin calls. You have the short interest, which continues to climb on AMC stock. A lot of bullish activity. You still have the retail investors in the markets. You still have hedge funds that are watching and paying attention to AMC stock, that are even making very large option bets that are super far out the money, betting on AMC stock to go up dramatically here over the next couple of months. And I think this could add a lot more pressure, you know, to that overall equation that we have right now. And I think it could be a very positive thing for AMC stock and for these potential rallies that we might see. Let me know your thoughts on this down below in the comment section. I would love to hear your thoughts, if this is substantial, if you knew about this, if you did not. This actually just came out yesterday, so this is a pretty new public article or public thing, so I'm sure we'll get more information on it, but I think it's a big step in the right direction to honestly getting a more fair market, but also helping out AMC at the same time. So that is going to be all for this video. If you guys did find value out of it and you like these short, sweet, straight to the point kind of videos, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, make sure to get your free stock with Webull, Moomoo, and Public. And I say most importantly because, hey, there's nothing more important than free money if it's free money, and it only takes you guys a couple minutes to get. So make sure you guys do that. Get yourself those free stocks. And if you guys want to come trade with me live in real time, link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.